Let's bring in Charlie Bobrinskoy. He's the vice chair and head of the investment group at Ariel. Charlie, I don't know if you heard those comments that we were just that discussion about economic uncertainty and how it's contributing. I don't know if this would be part of that overlay, but we just got some new comments from the president about this call that he had with Trudeau of Canada. These are Truth Social posts from a few moments ago. He said the call ended in a somewhat friendly manner, but he was unable to tell me when the Canadian election is taking place, among other issues. He said, I told the governor that he, well, that's his word, governor. He said, I told him that he largely caused the problems we have with them because of his weak border policies, which allowed tremendous amounts of fentanyl and illegal aliens to pour into the United States. These are responsible for the death of many people. So what is the market supposed to do with this information as it weighs reports that auto tariffs might be delayed?
Just to amend what you introduced the segment on, I believe the market hopes that Trump is using this as a negotiating tactic. I'm not sure they're sure of that, nor am I. Basic dynamic here is that the market thinks that that Trump will be rational, that he will realize that a trade war is bad for everybody, and that he will ultimately get some concessions from Canada and Mexico, and then we'll declare victory. That's still what the market hopes. And when we get signs that it's true, we get a rally in the market like today. But there is still a real fear out there that if he sticks with this and we end up with 25% tariffs on our friends, and we get reciprocal tariffs from Europe and obviously China, that could be ugly. The market is a free trader. The market believes that tariffs are very destructive. The market believes it's very hard on the consumer. It's inflationary. All of those things are bad. So the market is hoping that this is a negotiating ploy that's going to result in some better border enforcement, and then we can declare victory and go home.
You know what I've heard a couple of times? I think Larry Lindsay alluded to this when he was on with us last time. Another trader friend was telling me his point of view on this yesterday, that he thinks this is ultimately meant to forge a closer North American, literally something almost approaching an EU, maybe even the same currency for Canada and the U.S., so that we can then emerge from this stronger to face off against China and potentially Russia. I mean, that's a pretty huge event if it were to take place. I don't know if the market would even want to go there in terms of discounting it, but are we thinking big enough? And what does that all mean for investors in the meantime?
Well, Kelly, that's basically what we had with NAFTA, which I, of course, support, which business and the markets love, which is a reduction in trade barriers between the three largest North American countries, Canada, Mexico, and the United States. That would be wonderful, and that's what we free traders are all for. But boy, this is a funny way to get to that result. I mean, you've seen what's happened to retail stores in Canada destocking Jack Daniels. You're seeing support for the Conservative Party in Canada plummet because of the perception that the Conservative Party is pro-American. This is a funny way of going about forming a better union. I would love if what you just suggested were to happen, because that's what we do need. That's what we have within the United States, is no tariffs between states. That would be wonderful, but I think we're a long way from that today.
And so with all of this in mind, how do you invest?
Well, you try to look for things that are going to do well in the long run that are currently out of favor. And we would put a couple things in that category. Healthcare. People were very afraid of what Secretary Kennedy was going to do to healthcare. The demand for healthcare is going to be strong. And so far, that doesn't seem to be an emphasis of the Trump administration. And so some of the healthcare names like J&J and LabCorp and Bio-Rad are very attractive. And then housing. We have a lot of pent-up demand for housing. Interest rates are still higher than they probably should be, and they're above their historic averages. When we get more normal mortgage rates, we think there's a lot of demand for housing. We love Mohawk in that space. So those are names that are out of favor, trading at low prices. But this is a dangerous time. I don't want to bury that lead. Trade wars would be tough on the whole market.